Okay, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. My name is Afrin Aspat and welcome you all to today's session. So, our topic of discussion today is reform and development in the banking sector. This is Unit 28 IEIFS Module C. So, let's start this reform and development in the banking sector. First of all, if we talk about the infrastructure financing, see, infrastructure financing, if we talk about the infrastructure, it is considered as the backbone of the development. Why? Because the development of infrastructure is the most important aspects for the overall development of the economy. If we talk about the some feature of infrastructure, that is like first, it requires a very large investment. Obviously, if you are involving yourself in infrastructure, you want to build some infrastructure, you want to develop infrastructure, it require a very big amount, so huge amount actually invested in the infrastructure, right? Next, if we talk about this huge amount or this large amount, it is actually invested for a very long period of time. Why? Because the gestation period, it means that the starting of day of building the infrastructure till the day it has been completed. So this time period is actually very long, and due to this long time period, long investments are involved and longer time period is involved for the financing of infrastructure. Second, if we talk about the infrastructure, so this capital and bulk investments actually offers you the economies of scale. So economies of scale found in most of them, your per unit cost will be low in this infrastructure, right? And it actually offered you externalities also. Externalities means the profit here that you are gaining from that infrastructure. So it is obviously very profitable. Second, it involves large amount of investment. Third, the large amount of investment is invested for a very longer period of time, right? And that's why infrastructure financing is considered as a very risky finance, because there is a large amount which is invested for a very long period of time, right? Next, if we talk about the next thing, so components of the infrastructure, what are the components of the infrastructure? First of all, there is construction, electricity generation, gas generation, work supply, non-conventional energy, railway tracks like road and bridges, telephone lines, pipelines, waterways, port facilities, canals, and sanitation severages, right? So these are all the component of infrastructure. See, this is very important. Why? Because the question can be asked from here, that which of the following is a component of infrastructure, which of the following is not a component of infrastructure. Okay. Next, if we talk about the next thing, the channel of financing infrastructure in India. So what is the channel of financing for infrastructure in India? How this infrastructure got funded in India? First of all, there is government who is actually providing funding to the infrastructure, because they know that infrastructure financing is the most important financing. If we talk about the most important financing, that is the infrastructure financing, right? Second, if we talk about the development financial institution, so development financial institution is the source of funding. Development financial institution are those financial institutions which provide funding, especially in the infrastructure, and these funding are for a longer period of time. Commercial bank, NBFCs, insurance company, external commercial borrowings, and FDIs. So these are all the source of funding for infrastructure in India, right? Next, if we talk about the next thing, characteristics of the infrastructure. The first characteristic, it's is a very, yeah, it have a very longer maturity. Means whatever the time period that has been provided for infrastructure financing, this time period is actually very long. Okay, so there is a long or large time period, longer maturity period of infrastructure financing. Second, the large amount is involved in this infrastructure financing. Obviously, you want to build a building. Okay, it is part of infrastructure. Obviously, a very substantial, a very huge, a very big amount is actually required for this infrastructure. Third, there is high risk. When there is a large amount that is being invested for a very longer period of time, means the repayment period is very long. So obviously there is a very high risk that is involved in the infrastructure finance. financing, right? So longer maturity, larger amount, and higher risk. Next, if we talk about the next thing, development financial institution. See, development financial institution is the most important uh, institution which provide long-term funding, especially in the infrastructure product. So if any financial institution is specialized in providing long-term loans to the infrastructure projects, these are known as the development financial institution. Like there is IFCI, Industrial Finance Corporation of India, like there is IDBI, Industrial Development Bank of India, there is Nabard, National Bank for Agriculture and Rural Development, there is Industrial Investment Bank of India, there is Exim Bank, Export Import Bank of India, there is SIDBI, Small Industrial Development Bank of India. So these are all the banks which are development financial institution, and development financial institution are also called as the development banks. So development financial institution are also called as what? These are also called as the development financial. Development financial institution is also called as the development bank. This is very important. Remember this, right? DFIs, they provide long-term credit especially for capital intensive investment, capital intensive where more of capital is required rather than the labor, right? So if there is a capital intensive investment and you want to invest more on machinery or high technology, then for this the long-term loan has been provided by development financial institution, right? Next, if we talk about the ease, see, ease is a version that has been introduced by the Reserve Bank of India in order to enhance the experience. Okay, so ease is service excellence. Okay, ease is what? Service excellence. It means that they aims to provide a better customer experience in the bank. When the customer is coming to the bank, they are provided with a better and a good experience. For this, there is an ease, enhanced access on what? On service excellence, that is known as ease. Now there are different version of ease. Like 2018, it focused on customer responsiveness, digitization, financial inclusion, MSME support. Ease 2.0 means 2019, it focused on data analytics, grievances, tech enabled banking. Ease 3.0, it actually focused on enhanced customer experience, smart lending, process optimization. Ease 4.0, it actually focuses on digitalization. And Ease 5.0, it focuses on what? Regulatory collaboration, SME lending, small and micro enterprises lending, governance, export credit, etc. So this is very important. Which version of Ease is actually focuses on what, right? So everyone just please once comment and like the video. At least whoever is watching the session, I request all of you, you just please comment and like the video, right? Now if we talk about the next thing, the practice questions, first of all, which of the following sector is not included in infrastructure? Textile mill, waterworks, waterways and canals network. So which of the following is not a sector that is included in infrastructure? You can all answer this question very easily, right? Everyone, please answer the question. Everyone. So if we talk about the components of infrastructure, that part which I have already explained to you, textile mills, this is actually not a sector that is included in infrastructure, right? Next, which of the following are the characteristic of infrastructure financing? Which of the following are the characteristics of infrastructure financing? Larger amount, longer maturity, fixed and low real rate of returns, and all of the above. So if we talk about the infrastructure financing, obviously larger amounts are involved, which is invested for a very long period of time, then fixed and low rate of returns in the infrastructure. So all of the above is the characteristic. Okay. Now the last question for you all is that, sorry. Okay, next. Smart lending is actually one of the theme of which edition of ease? Smart lending is actually one of the edition of which version of Eve? Please answer the question, everyone. Guys, and please, whoever is watching the session, just please like the video. Now, this question is your homework, means you have to comment it in the comment section. Please comment this answer in the comment section. I will pin the right answer. Okay, I have told you the ease versions, right? So which version of ease is actually responsible for smart lending? That you have to answer in the comment section. Okay, now next, if we talk about the next thing, see, now if you want to learn this complete chapter in detail, okay, sorry, just a second, just a second. Oh, oh, and just a second, guys. Okay, now if you want to learn the complete chapter, you can just buy the Super Elite subscription all in one plan, in which you will get the access of different subjects, right? So there is foundation batch, master batch, DPF batch. There is all in one crash plus crackers batch that is given to you in this super elite subscription. So if you want to buy the super elite subscription, there is currently 46% off discount that is running out. So kindly, all of you guys, just purchase this subscription. Thank you so much for watching this session. I have given one question for your answer. So please answer that question in the comment section, right? Thank you so much for joining this session, everyone. Thank you so much. Till then, take care, everyone. Bye bye, guys. Take care, everyone. Bye.